Hello everyone and welcome to the YouTube channel of Being ACCA. We are continuing with the FM Pre-September 2023 mock and we are starting with section C question number 1 in this video. This is Lottrechio company and let's get started. So I can see that the requirement wants me to prepare cash flow forecasts for 3 months, September, October and November, and then they want me to forecast the quick ratio at the end of the 3-month period. So let's read the scenario now. Lottrechio company has several subsidiaries operating in foreign countries, and these subsidiaries look after their own financial affairs. Lottrechio company has recently experienced cash flow shortages in some months and cash flow surpluses in other months. The company is therefore keen to improve its cash management. Lottrechio company is preparing cash flow forecasts for September, October, and November. Due to their financial independence, the forecasts will ignore the cash flows of the foreign subsidiaries. Forecast income and expenditure information has been prepared as follows. So we have given with sales, labor, fixed cost, depreciation for all these months. And then all sales, okay, so we have some information regarding sales being on credit, 40% trade receivables pay after 1 month, 50% after 2 months, and remaining pay after 3 months. All purchases are on 2 months credit. Purchases are made 1 month in advance of sales. The average margin is okay. So we have information, all right. Annual interest payment in October, receive a loan in November, all right. Machine costing this much will be purchased for cash in October. Lottrechio company currently has no short-term investments and has a policy of not investing short-term cash surpluses. The company expects to begin September with an overdraft of $0.2 million. So let me format my answer over here. First of all, I am writing the answer for part A, and this is the cash flow forecast for September, October, and November, right? So let's get started. Let us put the names of the months first of all. So September, October, and November, right? And then over here, we can write cash flows. So let's first talk about the positive, that is inflows or receipts. So first of all, we have our sales. So let's have a look at the forecast. We have sales of at the same time, let's also prepare our working notes because we will be needing working notes as well, since a lot of people are, going to pay months and months afterwards. So let's get started with that. Let's prepare a working note. Maybe we can prepare a working note on the side or below this answer as well. So let's scroll down a little bit and let's write workings over here. So this is my working with respect to sales. I can just put my months over here: June, July, August, September, October, and then November, and then December also. Let's put, just because we have information from that also. So we have our sales over here. Let's type out the figures first of all. So this is 3,000. Then for July, I have 2250. For August, I have 3400. Then 2900. Then I have 3300. Then I have 2800. And then I have 3100. So this is the figures that I have been provided with. Then I am told that in 1 month's time, how many people pay? 40% of the receivables pay after 1 month. So I'm just going to put 40%. And so that means that 40% of these sales in June will be paying me in the month of July. So I can write 40% of this amount over here, right? So I will be receiving this much in July. Then 50% pay after 2 months. So that means 50% of this figure I will be getting in the month of August, right? And then remaining, how much is the remaining? Remaining is nothing but 10%. So 10% will be paying me in the month of September. So this comes out to be this multiplied by 10%, and this comes out to be 300. So this is what I'm going to be receiving. Another thing that we can do to make our presentation better is that let's write 2 months over here, and this is 50%. And then we have remaining 10%, and let's type this to be 3 months. So we can just, copy our, like cut our workings from here and paste them over here. And again, similarly, cutting this and pasting this over here. So this is for 3 months that we'll be getting. Now, let's do this for the remaining months as well. So for the month of July, I'm going to be getting 40% of payments in the month of August. Then I'm going to be getting in the month of September, sorry, I forgot to put the percentage sign over here. So 40% will be received over here. And then after 2 months, for the month of July, I'm going to be getting the payment of 50%. So July multiplied by 50% is what I'm going to be getting. So this will come out to be 1125. And then for the third month, 10% of the July's receivables will be these many. So this is 225. Now let's go for the month of August. So for the month of August, after 1 month, I will be getting 40%, right? And then for after 2 months, I will be getting 50%. So I can just link it from here as well. This comes out to be 1700. Then for the 3 months, I'm going to be getting 3400 multiplied by 10%. So this will be 340. Now again, we did for August now. Let's just go for September now. So for September, after 1 month, I'm going to be getting 40% payments. Then for the second month, I'm going to be getting 50% of this amount. So this comes out to be 1450. And then for the 3 months amount, I'm going to, we don't really need the forecast for December, so just let it be. Moving on, now we have done it for September. Now let's go for October. So for October, again, the 1 month payment will be 40%. After 2 months, we'll be getting in the month of December, so we don't really need to find that out. So we can total the receipts for the specific months that we need the figures for. So it will be nothing but the sum of these three figures. So this will be 2785, and I can just copy paste the formula over here as well. And this will be 3085 and 3110. Now I can just link these cells over here where I have made my calculations. So this will be this. And then again, similarly, I can link so that my examiner also knows that, okay, I have gotten these figures from here, and it will be easier for him or her to check my answer. So I will just link it to the last cell, right? Now we have our cash sales. Now let's look at the payment side of our cash flow forecast. So we can also bold these to highlight that these are the receipts and these are the payments. Then for payments, first of all, let's talk about purchases. Purchases. All purchases are on 2 months credit. Purchases are made 1 month in advance of sales. Average margin achieved is 60%. So let's find out the working for sales as well. Sorry, purchases as well. So I can write that this pertains to my purchases. So it is mentioned that we are buying 40% of sales. The average margin is 60%. That means 40% is our cost, 40% of our sales value, right? So we are ordering a month in advance. So 1 month in advance, and then we are also getting 2 months of credit on them, right? So first of all, I'm going to be taking 40% of the sales. First of all, we'll buy for the month of, we are buying 1 month in advance. So for the month of July, I'm going to be buying in the month of June. So this will be the 40% of this, and we are getting a credit of 2 months, right? So again, similarly, I can work this out for all of these months. Let me see if I get the correct values over here. Yes, so I can just drag this till November also. Right. So with this, I have my purchases. Now I am getting 2 months time period to make my payments. Now the 900 that I have purchased in June, I will be going, I will, pay this amount of money in the month of August, which is 2 months later. June and July, 2 months, I'm going to be paying this in the month of August. I can also link this cell over here. So again, in the month of September, I'm going to be paying 1360. And then again, in the month of October, I'm going to be paying 1320. Right. So these are my outflows. 1360. I forgot 1160 over here. And then I will pay in the month of November 1320. So these are my outflows with respect to my purchases. So I can just link these cells above. I have found I can also put a minus sign over here so that I can simply use the sum function later on. First of all, I'm putting it for the month of September. Then I can, this is cell F36, so that must be, okay, minus for the month of October, and then for the month of November, I can put a minus sign, and this was this amount over here. So now I have my outflows with respect to my purchases as well. Now let's look at wages, right? So fixed costs are paid in the month in which they are incurred. 80% of labor costs are paid in the month, while 20% are paid after 1 month. So we have to, probably create a working for labor as well. So for wages, let's go down below. Let's go to another working note, and this can be about wages, or you can also say labor, right? Both will be correct. So first of all, we are paying in the month 80%. In the month, we are paying 80%, and then 20% are paid 1 month afterwards. So 1 month later, right? So we can just put our values over here. For labor, for the month of June, my wages are supposed to be 680. Yes, this is the column for June, so 680. I'm just copying the figures from over here. 500, then I have 705, then I have 690, then I have 735, 305, and 600. So these are the values that are given to me for all of these months, and it is mentioned that 80% we are paying in the same month. So the same month payments will be nothing but 80% of this value. So this comes out to be 544, and then in the next month we are going to be paying 680 into 20%. So this is the payment that we are going to be making 1 month later. So now in the same month, it is 80% of 500, and then 1 month later it is going to be 20% of 500. So similarly, 705, we are going to be paying 80% in the same month, and in the next month we are going to be paying 20% of this amount. So this will be this much. Then again, I'm going to be paying 690 multiplied by 80%, so 552, and again 20% of 690, then I can have 80% of this in the same month. So I think, okay, we need for November as well. So let's find that out. So in the next month, I'm going to be paying 735 into 20% and 80% of the 305 amount. So this comes out to be this much. So I can just total my wages over here. So the outflows will be nothing but the sum of these two figures, right? I can just copy this formula, right? So For the months, I have 693, 726, and 391. So I will just link my workings over here, equals minus, and I have this is for the month of 693, yes, for the month of September. Then I need for the month of October, let's go down below. This is for the month of October, 726, and then I need it for the month of November, and November is 391. So now I have my workings for my wages as well. Now let's come to fixed costs. So with regards to fixed costs, what is written? Fixed costs are paid in the month in which they are incurred. So I'm just going to take the exact values which are given for the months of September, October, and November. So it is minus 480, then I have minus 595, and then I have minus 476. So yes, these are the figures that are given for these months respectively. Then something was we have covered the question till here. Must make an interest payment of 0.6 million in October. So we have the month of October over here. So 0.6 million, I will convert 0.6 million into thousands, because all our working is in thousands. So 0.6 million is 600,000. So this will be minus 600. So this is my interest on loan. Right. So just let it be interest, because it is not mentioned on which thing we are paying interest. And then we are going to be receiving a loan of 500,000, which is 0.5 million in the month of November. So I will show this as a positive figure, loan receipt, and this will be 500,000, right? And then we are going to be purchasing a machine. The purchase of machine will be 0.8 million. So this is nothing but 800,000. So I will write purchase of machine, right? Then I'm not going to be putting any depreciation over here, because I am preparing cash flow statement and depreciation is a non-cash expense. That is why I am not going to be showing any depreciation over here. Now I can find out my net inflows or outflows. Inflows or outflows. I will just put a sum formula over here. Sum formula, and this will start from here and end here. So these are my outflows. I will similarly paste the formula over here. So yeah, I have my inflows and outflows. Then we are given with some opening or closing balances. Um, the company expects to begin September with an overdraft of $200 million. So that means we are beginning the month of September with a minus 200 balance. So what will be the balance that we will have at the beginning of October? This will be this plus this plus this. My apologies. This will be the brought forward balance. And these will come out as balancing figures. I can just put a sum over here, and this will be 52. This will be something that will be carried forward. So this will be carried forward. I have a balance of 52, and in the month I will be having minus. So this 52 that I have carried forward, this will be brought forward to this month. So this will be the sum of these two figures. So this will be my carried forward balance. Now again, I will link this cell over here. This will be my carry forward. And at the end of the month, I will have these the sum of these two figures. And this means my closing balance at the end of November would be 679. So with this, I have come to an end to my part A. I can just, put this in a table so that it looks neater. Yeah, so format, cells, border. I can choose any border style. select all these boxes, click on OK, and you see your table has been inserted over here. Now these are the workings again, can be left this way as well. Now let's go to part B. Part B wants us to find out the forecast quick ratio. We can copy this from the statement as well. So I will just paste this over here. No, this will not let me paste. In the exam, however, you can. The forecast quick ratio at the end of the 3-month period. So let's perform this calculation. So what all do we need for quick ratio? We need my quick assets, which is all current assets minus inventory and prepaid expenses, and my current liabilities. So first of all, my cash at the end of the 3-month period that we just found out over here is 679. Then I have, as a part of my current assets, I have my trade receivables. So for the trade receivables, I have to collect it for the month of September, October, and for November. So those who are paying later. So that is what I will take over here. The September people will be paying at the end of the 3-month period 10%, which we had just found out. So September people 10% would be 2900 multiplied by 10%, right? So September people will be paying 10% are paying at the end of the 3 months. So this will be 2900 multiplied by 10%. This is what I'm going to be receiving in the month of November. Then again for October, how much were my sales? My sales for October were this much, and those who are paying after 2 months will be paying me at the end of November. So this will be for October, I'm going to be getting 60%. So 60% I will be taking over here. And then for November sales, 100% are going to be my receivables, because for the month of November, I have not received anything yet. Because all of them start to pay either 1 month later. So for November, I will have my entire 2800 as receivables. So this is my total. Now I can sum this up to find out my total, quick assets. So this comes out to be this much. And then I have my current liabilities. So for current liabilities, I see an overdraft, which we had just, take in our calculations. Overdraft was the company expects to begin September with an overdraft. We did begin September with an overdraft, but we are not left with any overdraft. We are left with something surplus. So our overdraft has gone zero. And then we have our payables. With regards to our payables are something that we have to pay for our materials and wages. So wages and purchases. So with respect to our wages, we are going to have to paying 20% of our November wages. So 20% multiplied by the wages that we have for the month of November wages. This is for the month of November. Okay, so 61 is something that we have to pay, and for purchases we have to pay for the month of October and November. So purchases, this is for the month of October plus for the month of November. So this is the amount that is left for our purchases. So the sum of these three figures is going to give me my current liabilities, right? So with this, I can find out finally my forecast quick ratio, and this will come out to be the sum of our quick assets divided by our current liabilities, and I can put it in a better format so that It looks neater. This is 2.37. With this, we have completed the first two requirements. Let's move on to the next one. The next one is discuss two ways in which the cash management of Lottrechio company could be improved. So how can they improve the cash management? So first of all, they can, invest their surplus cash. So we are also linking it to the scenario because in the scenario it is mentioned that they are not investing their short-term cash surpluses. So if they will start to do that, they will, have improved cash management. They will earn money from their surplus cash also. So another thing which is, specifically can be used in this scenario is that they can centralize their Treasury Department. How can this be linked to the scenario? This can be linked to the scenario in the manner that it is mentioned over here that the company it is mentioned over here, due to their financial independence, their forecasts will ignore the cash flows of the foreign subsidiaries. That means currently they are having a decentralized treasury department. So if they do centralize their treasury department in one place, it will be easier for them to, manage their cash. So these are the two ways. More ways can be to, ease their the shortages of cash. They can, probably ask their customers to pay in advance, or maybe give them some early settlement discounts so that they pay their dues early. So this can be done by easing cash shortages. And another way that they can use over here is that they can try implementing cash management models. We have learned the Baumol model, which tells us how much is the optimal amount of cash that a business should keep. So they can consider implementing these models in their business. Now let's move on to the next one. Explain the motives for holding cash. Now, this is a pretty straightforward question. It is straight away from your book. Again, for 6 marks, that means 2 marks for each motive that we have learned. So, what are the motives that we have learned? First is transaction motive. Transaction motive, and then you have your precautionary motive, and then you have your speculative motive. I will just briefly explain all these motives to you now. Speculative motive. So transaction motive is nothing but why are we holding cash? The companies hold cash because they want to meet their payment needs. They have to pay wages, they have to pay interest on loans or any debt that they have taken. They also have to pay their their suppliers. So that is why cash is held. Another motive why cash is held is the precautionary motive. So precautionary motive means that sometimes there can be some unexpected expenses. You do not always know that this will arise. Maybe some emergency arises and you need cash for that. So precautionary motive is also a motive for holding cash. Then the last is speculative motive. Speculative motive means companies also try to keep cash available with them so that whenever they have any investment opportunity, they can put their money in that opportunity. So these opportunities cannot be anticipated always, they may or may not be coming, these opportunities, but uh, companies do prefer holding some amounts of money so that if any opportunity arises, they can use cash for such motives as well. So with this, we have come to an end to Lottrechio company. Stay tuned for the next video. We'll be solving Telford company in the next video. Thank you so much for watching.